Hello guys, welcome to ARCS. So let's talk about gold today again. So yesterday I was marked these levels here, and as you can see it was just around this level below Asia, and as you can see the market just tapped into the next candle push high. I was expecting, okay, so you can see the move to swap Asia, but the market just retraced deeper, and this makes sense. Why? You have this 4 hour rejection block, as we have market as well yesterday. It was the rejection block from Monday. The market come once again yesterday to take out these levels, swap that liquidity, keep respect that level because it doesn't break below the rejection block. So it's keep respect and give a nice move to the upside, swap all of that liquidity. It was mapped yesterday. So, and why that? So most traders still trade bullish flags and bearish flags, and yeah, that's okay. That's good. It was an old strategy, but it's good anyways. Everything works if you know how things works. Every strategy works. All right. They have a specific time and levels to work. It's not just random. You see a bullish flag or bearish flag and you just jump in. It doesn't work like that. So if you mark that as a bullish flag, okay, what everyone expect. So you expect at least a supporting resistance level, and there we got it. Perfect. For smart traders, you expect the order blocks to play out, and you got it. The market already taps once. Invite traders to get in, then stop them out. Perfect. You have a supportive resistance levels here. That's the market breaks, retest, keep going. Everyone expect a bullish flag to tap into the supportive resistance levels. Then the market give you a nice candle to the upside and people start joining. And then everyone's get out. Why? So some people like to trade also breakouts. So some traders just place a trade just there and target the lower prices. So as soon as the market break, they jump in. You give a few profits, then swap them all. So the market always create a fake move before the real move. All right, just take that in consideration because that's very important. So after the market respect that rejection block, the 4 hour rejection block from Monday, this one here, give a true move, nice displacement, whatever you want to call, that's perfect. So also, as soon as the market create that fake move, invite more traders to sell. Where? Order blocks. Also, on the 30 minutes, also the 30 minutes, we have a breaker block as well. We have this breaker block. So after people saw, okay, move to the downside, great, break of structure, everyone will looking for trade this sell position here. But that's where the high time frame come into play. You should know your buyers from the higher perspective, higher time frame perspective. That's how makes things easy and different. All right. So, and today, what's going to happen? Let's see. So, if you notice for a few days from Friday, Monday, yesterday, and today is basically the same. You can see liquidity build, liquidity taken out, liquidity build, liquidity taken out, and you can see again liquidity build. And you still have internal range liquidity to swap. So that's internal range liquidity to be swept. So you expect the market give a nice move to the upside again, but from where? That's the great question. From where? Okay, so let's break it down. Let's mark this as a trendline liquidity. So the market just now are inside this breaker, trade inside this breaker. Perfect. So we have Asian low, Asian high. So let's take this out. Let's go to the 4-hour. If you go to the 4-hour, you have below Asia, you have this rejection block here. That's level it should keep an eye. So you have this rejection block just there. Perfect. That was the candle that swept liquidity, then break structure to the upside. Swap traders might to trade order blocks as well. So now you have Asian low as a pool of liquidity. You have liquidity to the upside, also order block that invite traders to sell. Great. So he uses as a trap. Now let's go to 1 hour. Let's make this like this. Great. So you have this as a trap, and also is if you notice is match with the trend line, so it's a lot of confluences from people will take in consideration this as a breakout structure, and it's not. Some people want to sell, and people want to buy. They just wait for the retracement of the Fibonacci. So now our place very close to the 50%. Okay, some people like to use the 618 and the golden ratio as well, 0.79 and 89. So this is not, if the market drops all the way down here, that level should be swept because it's very clear order block. Also, you have some people like to trade FBG, as people like to talk about that. I call it as IPA, as improper price action. So a lot of people are interested in this level, so that's how we call a pool of liquidity. So a lot of stop loss below that level. Now if you go to the 4-hour, look where are our rejection block. Just below the IPA or the FVG, below the 50% of Fibonacci, below all of that level. So if you trade this level, because it's going to be 1, 2, 3 candle, perfect. The middle one is going to be the FVG, whatever you want to call. If you trade that, you're going to trade here just below the current price. You target that, your stop loss should be below that. Look where is your stop loss. Just exactly on the rejection block on the 4-hour. So that's why I'm going to keep an eye on this level. You have two options, as you don't have a place to hide your stop loss. So if you trade like this, it doesn't make sense you put your stop loss like that. So it doesn't make any sense. So what are you going to do? Okay, so you go to the 30 minutes time frame. As soon as the market swept that level, and will do, as soon as the market, it should create now a fake move. So people will be interested in order blocks and all of that stuff. Then the market will swap. If the market will respect that rejection block, you will see a continuation. Something like this. You will see a displacement, and as soon as you get a displacement, then you are free to go. To target what? The liquidities as well. The same you do here, and the same you do here. Always target liquidities, nothing else. Yeah, this was a quick video just to show you what I'm looking for today. Thank you for watching.